Hey guys, welcome back. So I just posted that video on deferment with regards to Fannie and Freddie, and I'm already getting a ton of questions coming from you guys. So I thought it would be super helpful to actually reach out to somebody that knows more about this particular subject. He's actually in the trenches, talking with people from HUD, talking with people from Fannie and Freddie. And you guys, you've met his business partner before, Josh, but this is Scott Shang. Scott and Josh are business partners with Bywise Mortgage, but Scott has been around, this industry and helping the consumer out since, the last time we had to go through something similar. And what he's done this time is super helpful. He's actually created a resource that I'm going to link to below, but the resource is the Forbearance Report. So forbearancereport.com. And what this report is, or what this website is rather, is it's a place to go to get up-to-date information on really everything with regards to forbearance. Now, you guys know I do a lot of videos on it. And while he does have videos on the website, this is really information, that's taken from the direct sources, right, and posted directly on his website. Now, he also blogs about it, but you can actually find the original content here. And so if you're looking for information that's truly up to date on this subject, then that's definitely the place to go. But right, going to dive into some more detail with Scott and talk about some of the questions that you guys had pertaining to deferment. But before we do that, do me a favor. If you guys are new to my channel, if you're interested in forbearance, interested in real estate related topics, hit that subscribe button. Again, my goal here is to help educate buyers, sellers, homeowners, guide you through that crazy process. And right now we're touching a lot on these trending topics. So, and if you find this video with Scott and I helpful, hit that thumbs up as well, because more people will be able to see it, and which will allow us to achieve our goals, which is to help consumers. So welcome, Scott. Thanks for joining me today. So, as I mentioned earlier, I posted that video on deferment, and you and I have talked about it off camera. But, Fannie and Freddie basically came out yesterday and they said that they are now allowing borrowers who had forbearance with, that is related to COVID, to now take those payments and push them off, to defer them, if you will, to the end of the loan. And I know you've talked about other payment options and all of that, but why don't you talk about deferment? Because I think you can explain it in better terms than I can, and kind of help guide people and tell them exactly what it means when they say defer those payments.
Yeah, and thank you, Jeb, and thank you for being out here and talking about this. This is a really, really important conversation to have. Consumers, homeowners out there are not getting the right information. They're not getting everything that they need from their servicers or even from the government websites. It's government speak. And so deferment, I'm actually really encouraged. So I'm a lot more encouraged today than I was 2 weeks ago. As we really started to dig into this, and as we were building out the forbearance report and doing our homework, and yeah, like what you mentioned on the purpose of the forbearance report for us was to create a single place where consumers can get the most accurate information, because unfortunately, this whole COVID forbearance thing is kind of a clickbait fiesta for people that want to get a lot of traffic online, but there's not a lot of substance behind it. And but deferment is by far the best workout solution from forbearance. So as you know, forbearance is the bank allows you to skip your payments. Forbearance is not new and it's not unique. What is unique is that the CARES Act lifted some of the rules about the forbearance, and it was really the honor system. So the honor system, people enter into forbearance. We're now over 4.1 million homeowners in forbearance right now. I mean, just wrap your head around that number. 4.1 million people have to figure out in the next 2 to 12 months how to stay in their home. And there was a lot of things thrown out when consumers first started calling their servicers were telling them exactly what forbearance means. Yes, you skip 3 payments on the 4th month, you make all your payments. And consumers were being told that as of a week ago from the feedback that we're getting on the website. So what deferment is is the goal of the servicer with deferment is to allow the homeowner to begin making payments with no change in your payment. So it's literally an opportunity to press the pause button and then just start making your regular monthly payments. What they'll do is, depending on what type of loan you have, now I guess we should preface this by saying that the things that we're talking about are primarily for federally backed mortgages. It does account for almost 77%, 73 to 77% of the mortgages that are out there, just between FHA, VA, USDA, Fannie, and Freddie. So Fannie and Freddie have a very similar deferment. And what that is they're going to take the payments, they're going to put them on the end of the loan. So it's a loan modification, and it essentially does extend the term of the loan. Well, it is they'll take the payments. It's non-interest bearing. So that amount, so if you defer $5,000, that $5,000 is sitting on the end of your loan. If you use down payment assistance and you used a silent second as buyer assistance, it's almost the exact same thing. It's a fixed dollar amount with no interest rate that just sits there on the end. Now, it needs to be paid back anytime there's any activity on title. So if you refinance your home, you have to pay it back. If you sell the home, you have to pay it back. They're also implying that if you add or remove people from title, that it may also need to be paid back. I haven't seen anything yet about subordinating that dollar amount. I am hoping, as it sits right now, the refinance underwriting guidelines will not allow you to refinance after a forbearance for a minimum of 12 months. There are rumors, and I am hopeful that those are going to be lifted because there's a lot of equity out there, right? So a lot of folks have equity, and if they were allowed to refinance, because we know rates are going down, so if they were allowed to refinance, pay that thing off, get into a lower rate, everybody's happy. There are some guidelines around the deferment. What Fannie Mae was saying yesterday is they are going to make every effort to have little to no documentation required for consumers to request a deferment. You probably have to verify that you're employed. So, but if you're not employed, you're not looking at deferment. So under the CARES Act, you're eligible for forbearance up to 180 days on the first time you request. The overwhelming majority of banks gave 90 days. But we're seeing now in California, LA's locked down till August. So this thing is going to last a lot longer than that initial 90 days. So they may be going into 180 days, and then you have the ability to request an additional 180 days after that if you're still not in a position. Regardless of the term of your forbearance, you can take that dollar amount and you can put it on as long as it doesn't exceed 33% of your existing principal balance, which isn't going to happen. Right. So that would be like 10 years of forbearance. So that's Fannie Mae and Freddie Mac.
So you touched on two things there that I want to reiterate that I said in my video and was somewhat unclear about, that I think maybe, and I even said in the video, I'm not 100% sure that, how this is going to play out. One of those things was, the servicer is going to give people options still. The deferment's not going to be the only option. You're still going to have the option of a lump sum payment. You're still going to have the option of a repayment plan. You're still going to have the option of some sort of modification of your loan potentially. But then you're going to have the deferment option, right? So why would I, as a consumer, take any of those options other than the deferment option? Now, my thought was, and you can either tell me I'm way wrong or go, help me understand this, is that, when you go into forbearance, there is something out there, whether it's with the credit bureaus or whatever, that says I'm in forbearance, right? So I go into forbearance right now. You're my servicer. You tell, Experian, Equifax, TransUnion, all the credit bureaus that I'm in forbearance. So it reports in forbearance. And until I reinstate my loan, which means I make all those payments up front and pay that off, it's going to state that on my credit report. So I guess until all those payments are made, whether it's through a repayment plan, where I've got to pay it over 6 months, a lump sum payment or whatever, I'm assuming that still stays out there on your credit report. Whereas, that's why I might choose a deferment option, um, in the long run. But I'm assuming even with the deferment, right? If I choose that deferment, it's that forbearance isn't going to go away on my credit until those
I
payments are
think
made. I mean, is that right?
that's a really, really good question. I anticipate that is your reinstatement, that is your loan workout, and that's going to be
Okay.
removed. So what's happening right now and why people are saying their credit scores being impacted is, yes, servicers are reporting due to natural disaster or national emergency, this loan is in forbearance. When you do that, it pulls your mortgage out of the credit scoring model. Right now, I'm seeing it impact people between 10 and 30 to 40 points on their credit score. But what I'm told is as soon as you have a workout plan and that thing is removed, because continue to make normal regular payments. So I don't know 100% sure, but I would say 99.9% sure everything's going to be removed from your credit. Remember, everybody is trying to not penalize anybody for any of this. This isn't anything any of us did. This is just all of us banding together and trying to survive this thing together. Nobody wants to be hurt. You said something that's important, and I want consumers to understand this. When you go through a loan workout, there's a term called the waterfall. And the waterfall is essentially the cascading options available to you if you don't qualify for the easiest. So it's literally deferment is the simplest and easiest and preferable option. If you don't qualify for deferment for some reason, and there will be some qualifications, then potentially a loan modification. So one of the Fannie's Flex loan modification programs are available. Those require more documentation. Those require more paperwork. The next option, if you can't get qualified for that, now you're starting to look at like deed in lieu and short sales and foreclosures. So a deferment is a loan modification. They are going to modify the note to allow that money to be put on the end. So anything other than deferment, every one of those steps is probably going to require more documentation, more explanation, more interaction with your servicer, more efforts on your part to negotiate with a loss mitigation employee and get them the paperwork that they need. So as you cascade down this waterfall of workout options, it gets more and more cumbersome to you, to the homeowner. So
now the one thing you mentioned there, which I mentioned in that deferment video, what Fannie and Freddie is saying, and you even kind of touched on this earlier, is that your monthly payment's not going to change. Right? Your interest rate is not going to change. Your term of your loan is not going to change. So, basically when you pick back up, you start making your payments. When you're able to make those payments, then everything is essentially the same as it was prior to you going into this, right? But if you decide to, I guess the confusing part for me was that I guess it shows as a second mortgage, the deferred amount, or there's something somewhere where that deferred amount goes, where they're not actually changing, because they're saying, your maturity date doesn't change. Well, if my payments stay the same and my maturity date stays the same, there's got to be a way to pay that off. And so I assume when you, like you mentioned with the the silent help, through cities and different organizations that are out there, how it goes on as a silent second, that's essentially the same thing. Is that what we're thinking?
I don't know if they'll attach liens or not. There absolutely has to be some way that they can, that they're going to be able to document that
Right.
balloon payment is on there. But the absolute honest truth here is if you get back to work, you're going to end up paying those payments off in the next 12 to 18 months because you're going to see interest rates that you've never seen before. Right. So the chances of somebody refinancing before they pay off their loan in 30 years, very few people are going to be stuck with a balloon payment, right? So they're either going to sell or they're going to pass it on to their kids, or something's going to happen and it's going to end up getting paid off. And you're 100% right. If you cannot find work for the next 360 days, 1 year's worth of principal and interest payments are going to be sitting on the end of your loan. January 1, 2021, you're making the exact same payment that you made on February 1st of 2020. That's
Right.
their goal. That's their goal. Yeah. So it's literally just keep going with what you've got. So that's the Fannie Mae. That's the Fannie Mae one. Now there's some confusing language for me around the Fannie Mae, the Fannie Mae guidance on deferment. The guidance specifically says that you have to be a minimum of 30 days late for 3 consecutive months, but you cannot exceed 60 days late. And you have to be current for the month that you do the deferment in. So all that really means is be prepared to make that month's payment when you deferment. But what that also means to me is do not let your mortgage go 90 days. Do not let 3 consecutive months go by that you don't make a payment. Under the forbearance agreement, you should be able to be making partial payments. You should be able to be making partial payments to your servicer. If you can, you should, because I still don't know how they're going to deal with that. And I don't think they're going to have to address those guidelines. And this was released on March 25th, and they referenced it on the call yesterday, and they referenced that was the policy that they were going to follow. But the reason why I think they need to go back and address that, which I think they're perfectly willing to do, is because we've got this 180 and 360 day forbearance options that a lot of folks are going to have to take advantage of that. There's no way you're not going to ever be less than 60 days behind on those payments. So I think that's important. Now, FHA has a very similar deferment program, and it's called a partial claim. And a partial claim is kind of a partial claim against the mortgage insurance because it's federally insured, a federally insured loan, and it's going to behave exactly the same as Fannie Mae's deferment. They're going to allow you to take those skipped payments, end of the loan, treated the exact same way as Fannie Mae's. If you sell, transfer title, refinance the property, it needs to be paid. But the thing that concerned me about the FHA is they said you cannot be greater than 30 days late as of March 1st. Oh, wow. So if you were 30 days late prior to March 1st, then that partial claim is not available to you, and you're automatically down the waterfall, and you're looking at mods. And and here's another thing, Jeb, that I thought of. I was just thinking of, a lot of these folks we're talking to right now, they kind of went through the crash 10 years ago.
Yep.
There's a lot of folks that are new homeowners after losing a home. There are a lot of folks that survived that crash. If there was anything that I wanted to leave people with, it's that this is not that. It's not going to be as difficult to communicate with your servicer. Technology is a million times better than it was 10 years ago. Everybody's kind of been through the drill, and there's a ton of money behind this thing. So you can be confident that this is not going to be nearly the struggle. If you were involved in that 10 years ago, it's not going to be nearly the struggle, but you're also going to recognize a lot of the same challenges. There's no question that there's going to be challenges. I don't know if we want to talk about, there was a white paper that came out yesterday that was talking about, it was actually named the post-forbearance tidal wave and how they're going to deal with that. And basically what they're predicting is in the first wave, servicers are going to get millions of phone calls in a very short time. And that's going to gum up the system, right? That's going to gum up the works. The people that are answering your phones in those rooms, they've all been hired in the last 30 days. They're probably all working remote. They're not being supervised. They're being trained to the best of their ability. So that's why I think what you're doing is so vitally important. And I think the project that Josh and I started with Forbearance Report is so vitally important, because it's our mission to make sure that consumers are prepared going into this. As a consumer, as a homeowner, I want you to know your options better than the loss mitigation employee that you're calling, because they may not be telling you the right information. And if they don't tell you the right information, I want you armed with the truth and with your options. And that's how you're going to succeed and navigate through this.
No, I couldn't agree more. I mean, I've said that multiple times, is, chances are the person that you're talking to on the phone has probably been at the company less than 30 days. And it's not that they're feeding you misinformation, or that they're aware they're feeding you misinformation. They just don't know, right? They're reading from a script, almost to a T. And if your question isn't on that script or that dialogue that they have, they don't know where to go with it. And so that's why a lot of misinformation is being passed along out there to start. And it's not on the fault of the person on the phone. It's just a lack of transparency and a lack of communication from the top, right? There's, Fannie Mae and Freddie passed these guidelines. And like we're talking about this today, right? And we said, or in my video, I said, this option becomes available July 1st. Well, you and I had the conversation. They're going to start having these conversations as of June 1st. Well, somebody's going to watch this video and they're going to call their lender up and they're going to say, I heard there's a deferment. Guess what? It's not even started that conversation yet based on what we just said. And they're going to be confused because we're passing along this information. The person answering the phone has no idea what the hell we're talking about. And so it takes some time for this. We are really on the front lines here. We're providing information as soon as it comes out. And while that's awesome, it takes some time for these, the servicers, the companies, everyone to take that language and actually implement it. And so, like you mentioned a moment ago, being armed with the correct information is the first step in this process. Now, keep in mind, it may take you some time to implement that information, but at least it takes, some of the unknown, some of the anxiousness, if you will, about what's going to happen in the future off the plate, because you know that these options are going to be implemented at some point in the future. But I mean, I think that's why, again, we started this to talk about Forbearance Report. If every loan has a servicer, right? And so one nice thing about Forbearance Report, and I think we'll kind of end on Forbearance Report because that's what this is more or less about, and what we started the conversation about, is that you can go on there and chances are your servicer, all the information that they have on their website or that is known about that servicer, that is put out there, you have that information on your website. So why don't you touch on, let's talk about Forbearance Report and kind of end on that, and I'll let you go.
Sure. No, I appreciate that. Yeah. On the Forbearance Report, essentially, as soon as you go there, you're going to see we've got 59 servicers up there right now. So I believe there are probably about 130 to 150 total. But we've got the big ones, most of the big ones. If your servicer is not on there, there's a form. You can tell me who your servicer is. I'll do all the homework. We'll find their information and we'll post it and we'll get it back to you. But most importantly, what we have is we have the ability to find out who's servicing your loan. So on the site, there are several links on there. One is for MERS Servicer ID. It's the Mortgage Electronic Registration System. You can enter in your address and it'll tell you who your servicer is. We also have the Fannie Mae and the Freddie Mac lookup tools to see whether it's backed by Fannie Mae or Freddie Mac. And again, since the crash, over 70% of loans are now federally backed. So the overwhelming majority of people watching your videos are going to have these smooth transitions. We compiled all of the Q&As, every question that we've received, and we tried to translate that into straight English. Because really what we're doing here is we're in a high stakes game of telephone, right? CFPB says this is the way it's going to be. and then the servicer says something and they try to sort of do their loss mitigation person. So we've collected all of the original sources, all of the government sources, all of the questions and answers from all of the servicers and CFPB, and we've compiled them all on this site. Like you said, I have been blogging about this. We've got links on there under the mortgage expert section, but it's a very, very simple website, and it's all just compiled the most accurate, up-to-date information that we've all compiled into a single place so that you can get answers and quite frankly, so that maybe you have the opportunity to, like you said, get prepared, know exactly what the servicer wants, and be in a position that when you call them, you're telling them which option you want before they even have a chance to say anything.
No, that's awesome.
I have a Fannie Mae mortgage. Here's my thing. I'm back to work. I'd like deferment. Okay, thank you.
And that's awesome. I mean, and here's the thing, for those of you still watching the video at 25 minutes into this thing, if you have questions, as I said, put them in the comments below. I'm doing my best to address every single one of those questions firsthand. But where you can even go a step further is if you're on Scott's website, he has a list of questions. A lot of the questions that people have asked on my videos are already answered on his website. So you can go there to likely get the answer to your question. But I would encourage you, if your question's not on there, leave it on the comments below, leave it on Scott's website. There's an opportunity, a place to do that where you can ask your questions, and it will get addressed, right? I mean, we don't have all the answers, but we're willing to do the research. We're willing to put out the time to help consumers, guide them through this process. And I mean, because ultimately that's the goal, right? Neither of us are doing this out of anything other than, the opportunity to help others. So, anything else, Scott? Any last thoughts? Any parting ways? Now, I'll put Scott's information. I'll put the website, the link in the website, in the description below, so you can just click on it. I'll give you Scott's contact information if you want to reach out to him directly. But again, Scott, throwing it back to you for parting words.
Thank you. Just the forbearance report. These things are literally changing every day. We're negotiating with servicers. We're trying to get servicers to provide us with their specific policies. We're trying to create those relationships so that we're getting the most current information as soon as we can. So visit it. There's an opportunity for us to send you notifications when there's new information out there. But always reach out to us. And I just want to commend you for putting yourself out there. And like you said, we don't get anything out of this. Our business depends on everybody being healthy and being good and back to work and managing their financial wealth through real estate. And that's where we want America to be. And we're just trying to play our part in whatever way we can. So no, I don't have anything other to add than that. Other than please visit the website, bookmark it, visit it, allow the push notifications. So when new stuff comes out, we're working really, really hard to try to filter the most accurate information directly to you, the homeowner, so that you can be in control and be empowered during this, because we all feel so helpless right now. We need everything we can to feel like we're in control, and this is it.
No, that's awesome, Scott. Well, dude, first off, thanks for taking the time. I know you're a busy man, especially updating the website and keeping all this information current. But I encourage you guys to go check it out if you haven't already. And again, reach out to us if you have questions. We appreciate you watching. We appreciate the support. And if somebody may be going through something, you can refer it to them as well. But either way, we both appreciate you taking the time, and we'll see you again soon. Have an awesome day.